All right, welcome back. Tech rallying today as President Trump says the tariff rate on China will come down, quote, substantially. It's still one of the worst performing sectors year to date, more than 16%. Let's bring in now top tech investor Jeff Richards. He's managing partner at Notable Capital. It's good to see you. Welcome back.
Great to be here on a green day, Scott.
Yeah. Well, I mean, don't jinx it. Don't jinx it the way things have been going. You never know.
Good
Which
point,
brings me to
point.
I guess my first question. I mean, what's the valley view, if you will, of all this?
You know, I'll give you 2 data points. One, our founders, founders of private technology companies have been through a crazy ride the last 5 years. We had the COVID pandemic. We had the market crash of 22. We've had up market cycles and down market cycles for fundraising. So there's an incredible amount of resilience and durability in our companies. And, I think folks are taking it in stride and just saying, hey, just tell me what the rules are and we'll play the game on the field. The second thing I'd say, obviously, we have one of the biggest tailwinds of our lifetime in AI behind us. And I heard your last guest talking about it as well. All of us who were here for 08, 09, where we saw the advent of the iPhone and cloud computing, would love to go back in time and invest in, the next Facebook, the next Shopify, the next Square, the next Stripe. All those companies came out of that cycle, DoorDash, Uber, et cetera. We know this cycle will be similar. It's just in the early days. And so we're in a very long duration business. We're investing for 7 to 10 years with most of the companies we're investing in. And folks are putting a ton of capital to work and just seeing amazing things happen on the ground. And couldn't be more bullish despite what we're seeing in the headlines every day. We know the long-term outlook is extremely positive.
It's interesting, though, where you say they're saying just tell us what the rules are and then we'll be OK, because then we can navigate. It's difficult, though, when you and nobody else really knows what the rules are. So, I mean, those conversations must be so interesting. Yes, I understand the fact that we've been through different periods of uncertainty before, but this one truly does feel a little bit different.
Yeah, I think, if you wind back the clock 2 years ago in 2023, there's a great chart from Goldman Sachs that showed 60% of economists were forecasting recession, and that didn't happen. So I think a lot of founders and CEOs have also learned that, there is a lot of noise day to day. And if you're building a company over a 5, 10, 15, 20-year period, you're going to have a lot of up days, you're going to have a lot of down days. You really can't pay attention to it. I'd say the biggest thing where it does make an impact is when we think about what the end customer buying cycle might be like. So if we do see a slowdown in earnings or growth for S&P 500 companies, for example, that could have some negative impact on the software and technology industry. But we saw that in 23 and 24, and we navigated it. Folks pulled back budgets for buying in software in particular, and you saw growth slow down for a lot of the public companies. But founders have navigated that. And so, again, I just, so much of the investment and the focus right now is on AI, building things that are going to matter for the next 3 to 5 to 10 years. And you've always got, you've got examples in the market today of what AI can do. I always use Waymo as a great example. You get in a Waymo, and it's hard to dispute what an unbelievable experience that is. We're going to have that kind of experience across a whole bunch of categories, not to mention, enterprise software, cybersecurity, all these really important categories to our country as well as many others. And it's, I was here for the .com era. I was here for the cloud and mobile era. And I think we all know this one's going to be much larger and have a much bigger impact on our economy and the world's economy.
Well, where do you think we are, though, in the cycle? I mean, there have been questions about some of the spend by hyperscalers. You see those concerns show up in some of the data center power names, for example. Now, today's a great day for all of those because of some of the earnings reports and commentary that's come out, but it's not going to extinguish the questions that exist.
Yeah, I think if you think about the cycle and the way it normally plays out, the first phase of benefit and value shows up with the chip companies, so the AMDs, the NVIDIAs, the TSMCs. Then you see the hyperscalers and obviously the spend that they're putting to work. And they're putting it to work for a reason, because they know this is the future of a major computing paradigm and they can't afford to miss it. And now you're just starting to see it benefit the software players. So notably, a number of the names that have held up reasonably well over the last 3 to 6 months, and I'd give you a couple of examples: Snowflake, CrowdStrike, Monday. These are companies that people believe have a lot of tailwind behind them with AI. Snowflake's up 31% in the last 6 months. CrowdStrike's up 21% in the last 6 months. Monday, which sells to small businesses, mid-market, productivity software with a heavy dose of AI, up 9% year to date and up 37% in 1 year. So it's a lot of folks would have come into this cycle saying, gosh, these are the names that are overvalued. But I also think you see that's where folks see durability and, if you will, a put on AI because they know there's upside in those names.